billion of trade in goods between the two countries back in 2024. And that clearly shows that the US imports from China stand considerable a higher number, $438.9 billion as compared to its export of $143.5 billion to China. So those stated objectives or the goals by President Donald Trump, don't you think they're actually aimed at overcoming this particular trade deficit with China? And might find some sort of a logic when seen from the American perspective.
First of all, thank you for having me on your show. Even if you frame this in terms of the American perspective, Trump has offered contradictory promises to the American people on this subject. And I'll explain why. On the one hand, he says that putting tariffs will raise a lot of revenue, and so it'll address the deficit and it'll make America stronger. He aims for $6 trillion on one side in raising revenues from imports. That's what the tariffs are. And at the same time, he's promised America a manufacturing renaissance, that industry will grow and will make things locally. Here's the problem. If you import a lot and you make $6 trillion worth of tariffs, you're not going to have a manufacturing renaissance because you're still importing from the rest of the world. And at the same time, if you have a manufacturing renaissance and if you're making everything locally, you won't get $6 trillion in imports because you'll be making things yourself. This is the first point.
That's quite a paradoxical situation.
It is a very paradoxical situation. If you allow me to humorously put it, it's the conflict between the art of war and the art of the deal. The art of war, what the Chinese are using, says you know yourself and you know your enemy, you will succeed in all battles or 100 battles. The art of the deal, which is Trump's book, if I paraphrase it, it is in order to confuse the enemy, you must first confuse yourself. And that is what Trump has done. Ideally, he has confused himself. And I will put this in a serious context as well. He miscalculated severely. He thought that if the stock market goes down in reaction to it, it's no big deal. Because the earnings of companies, as Sir was saying, will be compressed by the additional cost that they have. That's fine. But people will simply go into treasuries, into the bond market. It'll be all right. But here's what happened. Instead of the stock market going down and people moving to treasuries, they skipped the US treasuries altogether. They treated America as a toxic asset, as in a third world emerging market, and they instead moved into gold, into crypto at times, into the Swiss franc, and into German bonds. They said that America as a whole is toxic, and this was the miscalculation. So Trump had to back down, and he said, well, the market was a bit queasy. And a word he invented, yippee. It's a little bit yippee, he said. I don't even know what that means, but this reaction tells you that he had to back down. He miscalculated so much.
So he miscalculated when we talk about the other countries. So why China happened to be the exception? But he doubled down when it came to the case of China.
Because ideologically, this has been an idea where he has criticized his predecessors. He's criticized Biden, he's criticized Obama for going too easy on China. And China has already, on purchasing power terms, surpassed the United States as number one. The whole narrative of the United States, at least since the end of the Cold War, has been USA equals number one. The moment USA equals number two, the whole thing falls apart. What else does America have? And in the meantime, China is taking 3 lines of attack which are very strategic and very precise. The first is the rare earth thing, because that stops American manufacturing renaissance. It's dead on arrival. It simply won't begin. The second is on semiconductors. So the high-end manufacturing, if they wanted to, they won't be able to get it done in America because semiconductors are simply so important to the digital economy. And the third is aerospace. Coming from the Center for Aerospace and Security Studies, I can tell you that aerospace has huge second-order effects in an economy, including innovation, including employment, etc. So he is struck at Boeing. And that's how you, with just 3 small tools, before you even go for the nuclear option like selling your treasuries, you've already put America way far back than it was intended.
Dr. Usman Chohan, when we talk about, there was an exemption that was announced by the Customs and Border Control Department of the United States of America. So that primarily deals with 20 leading products, including the smartphones, solar panels, electronic products, semiconductor chips. Why that exemption?
Because of corruption, essentially. You can lobby the administration if you're powerful enough and big enough to get exemptions for what you have. So Apple managed to do that. The problem is that in America, the backbone, like any strong economy, would be small businesses, and they can't lobby for those exemptions. Whenever you create distortions in an economy, you will have these kinds of bribery and corruption issues, and small players cannot compete. They don't have a level playing field. Apple is a multi-trillion dollar company. It can find its way through no matter what. And this is unfortunate. It basically shows that the United States is behaving more and more like a emerging market with poor institutions, with all these exemptions. And you're seeing that there's deeper problems in America right now. Basically, if I can frame it for you, America used to have one problem. Now it has three problems economically. The first was it has a fiscal problem. It has a $36 trillion debt. And its GDP is $36 trillion, coincidentally. So now its debt to GDP ratio is 100%, which is very worrying. Now, they're cutting on government, which is the good stuff.
Dr. Chohan, I see your partner for the interjection over here. I'll have to go for a quick short break, and after the break, we'll resume the discussion from here. For that, stay tuned. Welcome back to Views on News. We are joined in the studio by Dr. Usman Chohan and Mr. Zamir Ahmed Awan discussing the escalating trade war between China and the United States of America. Before heading for the break, we were in conversation with Dr. Usman Chohan. Dr. Chohan, please go ahead. Please finish your thought.
America used to have one economic problem, and now it has three. It has $36 trillion in debt, and it has $36 trillion of annual GDP. So its debt to GDP ratio is 100%. This means that now it is starting to get in a worrisome place where it needs to be able to finance things. But as the bond yield situation showed you, there is no trust in American assets the way. So it cannot simply print money. That creates the second problem, which is a monetary problem. In previous crises, 2008, 2020, they could simply issue more money or more treasuries, more securities, and the world would eat them up. They would buy them. Now, nobody is keen to have this. And in addition, the percentage that China owns of treasuries, it has also been decreasing. So 30% is foreign owned, out of which it used to be 30% of that China. They have been removing it since 2011, and now they're just at 8%. So the world is starting to shed this treasury, and that creates the third problem, which is their currency problem. The confidence in the dollar as the central pillar of the global financial system is weakening, and people are trying to diversify as much as possible and in an accelerated manner. When you have all three of these problems, you should not be playing such dangerous games with the global financial system, because your own position is so weak. And because of this now, you are seeing popularity, the polls show that Trump is falling precipitously. He's plummeting. So in less than 100 days, he has gone from, in terms of the poll, this is a CBS poll, confidence on the economy from 70% to 50%. His overall rating similarly has dropped by about 20 percentage points in less than 100 days, which it never happens. So Americans are realizing that this is not good for them as well.
Okay, so what's your understanding when it comes to the direct impact the U.S. consumers are going to face with this?
There is an estimate that it should cost them about $4,000 per household, and this is at a time when, you know, most Americans don't make $4,000 per month. It's just difficult to get by there, and the social safety net and all these things are being eroded. That is in the pretext, under the pretext of reducing the fiscal issue, but still you have defense spending increasing, which is going to Israel. It's not going to America, and at the same time they are giving a tax cut, which is a deficit. It adds to the deficit, and it's going to the rich. So the cost to the American taxpayer, ordinary people, is terrifying, and you cannot quantify it yet because there's so much volatility. We don't know what exemptions this, 10% today, 120 the next day. Nobody really knows what is going to happen. Anybody who tells you with confidence right now is lying. But the fact is that in such an unpredictable environment, there is a harrowing sense of uncertainty in America, above all, about what the future will be like.
There is also, you talked of that very opinion poll by CBS, right? So there is another analysis by Yale Budget Lab that talks about the impact as far as the job loss is considered after these tariffs. It gives a figure of 740,000 people losing their jobs by the end of year 2025. Isn't that humongous?
It is, and I think it's an underestimate, because the reason that job losses are going to happen is because many businesses in America operate on quite a thin margin. And so their cost structure, if you look at their income statement, already didn't have much space. If you add these tariffs in, then you're increasing and expanding the cost of goods sold, so the margin will really compress. Where can you then find a way to save up to just make a bare minimum as a company? You're going to have to lay off workers to then compress that. When you have this unemployment, plus you've eroded the social safety net, you will see serious social consequences such as crime, violent crime particularly, or arsons and so on, because you haven't thought through the whole thing. So,
okay, do you think, is there going to be any impact, the same question that I asked Mr. Zamir Awan regarding the retaliatory tariffs by Chinese on the US 125% now?
Yes, because particularly, well, they've capped it because they said anything above 125 doesn't make sense anyways. So that's enough. But their strategic attacks through rare earths, through semiconductors, and through aerospace already kill the dream of an advanced manufacturing sector in America. Just with 3 small levers, you've already ended their ambitions right there and then.
Usman, Chohan, when you talk about the agriculture sector in particular, there are findings that Trump's first trade war with China from 2018 to 19 resulted in billions of dollars of lost revenue for American farmers. So these retaliatory tariffs on part of the Chinese this time around also focus on that particular sector as well. So how do you think it's going to be impacted?
You're absolutely right. In addition to rare earth, semiconductor, and aerospace, there is a big lever that China still has. It's not exercising it fully yet, but basically the things that America needs from China, it'll struggle to get from elsewhere. But the things that China gets from America, it can get from elsewhere. For example, soybeans. For their pig industry and stuff, you can simply go to Brazil and Argentina. This will decimate the Midwest, and the Midwest is the most ardent supporter of Trump. And in the last time, in 2016 or 2017 onwards, they targeted specific goods like that. So, for example, ketchup from Kentucky or other such immediate agricultural items that actually affected red states that they then had to lobby Trump. So you can always, art of war, get to your enemy to fight for itself as opposed to art of the deal.
Okay, one very important aspect to it, Pakistani authorities responded to this 29% imposition of tariffs on the part of the US, although we're also in that particular list where there is a 90-day pause for these tariffs, but still a baseline 10% of the tariffs apply to all those countries. Pakistani authorities have repeatedly said that they are concerned. Of course, there is not going to be retaliation on the part of the Pakistani authorities. They've also decided to send a high-level delegation to the US in order to promote trade relations with the US, also negotiate these tariffs. What are the options at this particular point in time, and how these tariffs, if implemented, are going to affect Pakistan's economy? In that particular scenario, what are the ideal lines to navigate through this particular regime?
Yes, well, I see 4 ways out of this for Pakistan. One is simply to ignore it because the relative cost differentials are not so high in the areas where we export. So just ignore it. The second is to send a trade delegation, and you may actually get some extra concessions because Trump, acting like a king, will want that tribute from the periphery. So you can do that.
Already 75 different countries have approached.
Correct. Many countries have taken this approach.
So they are likely to get concessions?
Yes, I think so.
So, but when China talks of going into dialogue to discuss these tariffs, so
yes,
is that being considered, or should it be considered by the US administration, or why is it not being considered at the moment?
Well, China has very little to gain from doing that, but we do have something to gain from that. And even then, it's just a minor approach. At the same time, the third option is to diversify your end market. So you have GSP Plus and all this, go more to the EU, do market research in Africa, Latin America.
Diversifying, right.
And the fourth one is what we talked about in the last episode. Just import 3.5 billion worth of stuff from America. You square it even, and those can be valuable things for our economy. There you go.